Everyone's heard of support and resistance. Everyone has heard of supply and demand. But how many people trade the interlevels of these types of strategies? Whether you're a technical analysis trader or you're an algo trader like myself, you can utilize the key levels in this video to your advantage, and hopefully it improves some of your trading. So let's get into the video. So a lot of traders are familiar with and trade support and resistance and/or supply and demand type strategies. For those of you who don't know, support and resistance is pretty much taking peaks of price where price moved significantly away from certain price levels. And the theory is that when price returns to this level, it'll either retrace off of it or it'll break through it and retrace to continue movement to the new direction. And there's various ways to trade it, whether you trade peaks like this or into market, there's lots of different ways. And then more of the supply and demand type trading, which is a similar concept, but can take into market as well, not peaks. And that's basically where traders will trade something like this, where there's a key level where price moved significantly away, and there's different ways to draw it, but price tends to react around these areas quite nicely, and it does so and works. However, there is another type of key level that I like to trade, and I trade algorithmically, but you can do this manually as well. And that is using commercial dealing levels. And that tends to occur at weekly, monthly, yearly, and quarterly and daily opens. So let me break down what that actually looks like, and then I'll show you how to trade it. And then I'll give you an example of why this actually happens and why this level is so significant. So let's take an example of this last week's trading on gold. And let's take a typical support and resistance type strategy where you'd expect price to do something around this area. And you see a spike. Let me just zoom in a little bit. You see a spike here, and some would have gone short because, again, this is a key level. But price broke through. So naturally, traders will then tend to favor old support equals new resistance and so forth, and then use that as an area to trade back up in the direction of the trend. Now, when it broke through this area, a lot of people would have neglected this area and it wouldn't have been deemed valid because price has broken through and it didn't react and continue. However, if you look a little bit closely and we add in the weekly open, look what happens to the weekly open. This price here is exactly when the new week opened, and this line represents, or every yellow line represents, a new week. And look how price reacted twice, almost to the pip, to these key levels. Now, if you were trading order flow, or if you were trading order block, supply and demand as a support and resistance, you may have missed these positions. And they are one of my favorite types of trade to utilize. And they work so well because the open of the new week, the new quarter, or the new month is when a lot of commercial dealing happens. Interbanks, that stuff happens. Even to a certain degree, if you bullion market with commodities and the London fix at 4 p.m. Every day in London, lots of transactional values are created around these areas. So I'm going to give you another example and show you how it works. So again, what we have right here is a yearly open on the 1st of January. And again, price reacts well off this area and moves away. So on the same chart again, let's look at another example on how price reacts around these areas. So if we take this, for example, a lot of people will be trading maybe like they call it an order block or a supply and demand area on this level. And yes, price did react nicely from it, but the actual move came almost exactly again from this weekly open area. And another example, again, on the same chart. What we have this time is a lot of consolidation around this price range, which was about almost a month in total of just consolidating movement. And this is a nice move that people could have caught. But around this area, a lot of people wouldn't have traded it because it's just a mess. But again, if we draw across all of these weekly opens over the past 3 weeks in this area, because we have 1, 2, and 3 yellow lines, this is just all weekly commercial dealing levels, and you can see how price reacted from that area when it came back to it. On the same chart again, this time we're focusing on the daily chart, and we're looking at a quarterly and yearly open by the blue lines and the purple lines. And again, look how price reacts around these levels. Some of these can be very, very to the point. And when you have these weekly levels, monthly levels, quarterly levels, and you pair them with your traditional trading, whether it's supply and demand, whether it's support and resistance, or anything in between, you can get very, very accurate entries. So again, it's not the holy grail. That sort of thing doesn't exist. However, when you pair something like this with what you're already doing, it may give you an added layer of confluence to your trades that you didn't necessarily have, or it may give you a trade idea which you would have overlooked because your traditional strategies, it didn't fall in line with what you like to trade.